Welcome back. So in this video we are going to solve a past paper question related to this topic, and this question is from June 22 paper 22. It is a combination of preparation of cash book, that is how we prepare this day book using a set of transactions. Then the second part is related to bank reconciliation, and the last part is related to basic bookkeeping. So let's begin. The question says, Peter is a trader. The following transactions took place in April 2022. So these are the transactions, and in the first part we are required to prepare Peter's cash book, balance the cash book, and bring down the balances on 1st May 2022. And this is the cash book. It's a 3-column cash book. The debit side shows discount allowed column, cash and bank. Discount allowed is what we allow to our customers when they are making a payment to our business, and discount received column on the credit side when we receive a discount from our suppliers. So let's begin. The first transaction is on April 2nd. Cash sales amounting to 410 were paid directly into the bank account. So since they were directly paid into the bank account, we won't be debiting cash, rather we will debit bank and we will credit sales with 410, right? This will be recorded on the debit side of my cash book on April 2nd, sales, and in bank column. We can also see that we are also given the balances brought forward for cash and bank. So make sure when you are balancing these two columns, when you are extracting the balance, we do include these amounts to calculate the correct balance, right? Now the second transaction says on April 3rd, paid 798 to Rahat by check in full settlement of a debt of 840. Now the debt was, we owed Rahat $840, however we are only paying 798. This means that how much are we not paying? $42. This is the discount that the business has received from its suppliers, Rahat. And this transaction has been financed through bank. So we will record on the credit side on April 3rd a payment to Rahat. The amount that we aren't paying, the amount that we are getting as a discount is $42, and what we are paying is $798, that is 820 less 42. This is what we are paying. Next is on April 8th, paid $42 cash for motor vehicle repairs. Very simple transaction. Cash account, cash column will be credited in cash book, and motor vehicle expenses or motor vehicle repairs would be debited. So $42 will be written in the cash column. 42 on April 8th, motor vehicle repairs, right? Now moving forward, on April 15th, purchased goods list price 320 on credit subject to a trade discount of 10% from Rahat. Again a transaction with Rahat. Previously we were paying her, now we are purchasing goods on credit, and the list price is 320. List price is the basic price. This is the price on which we can negotiate, and therefore Peter got a discount of 10%. This means that Peter isn't buying the goods at a price of 320, rather 320 minus the 10% of 320 would be 288. So he will be purchasing the goods for 288, but right now the transaction is on credit. We aren't paying anything for these goods at the moment. So should I record this transaction in my cash book? No, it won't be recorded. Why? Because this will be recorded in my purchases day book. Purchases of goods on credit are recorded in purchases day book, and all the transactions which are related to cash or bank are recorded in cash book. But since this transaction is purchase on credit, so it will be recorded as purchases debit 288. The post discount value and Rahat's account would be credited with 288 as well. Since cash or bank isn't involved, so it won't be used in part A, that is it won't be recorded in my cash book. Keep this in mind. Such transactions are usually there in past papers. So if you are aware that which transaction is recorded in which day book, you will not make the mistake. Moving towards the 18th April, Cash sales, say 460, very simple. Cash account will be debited 460 and sales will be credited. So over here I will write sales on 18th April in cash column 460. Make sure that you are entering the entries in the correct columns, otherwise you will end up extracting a wrong balance. Then on 20th April, paid 392 to Samir by telephone transfer, having deducted 2% cash discount from the amount due. So the amount due was the amount due 392 or any other amount? Any other amount. Why? Because we are paying 392 and this is the post 2% cash discount value, because we are paying this value, we are paying this amount. This is the after value, after deducting 2%. The transaction clearly says paid 392 Samir, having deducted, we have already deducted that 2% discount from a value, and after that we are paying him $392. Now first of all, should this be entered in my cash book? Yes, it will be entered. Why? Because telephone transfer is just like an online transfer, online banking through mobiles. So this will be financed through my bank account, and therefore it will be entered in my cash book. So it will be recorded on the credit side. Now 392 I am paying. So let's first write that down, that on 20th April I am paying Samir 392 through my bank account. That will be written over here, but something has to be written over here as well, because we are getting a cash discount. How should I calculate that value? It's very simple. If $392 represent 98% of the payment, because 2% I am not paying, I am getting that as discount. So how much would be the full payment on 100%? If 392 is 98%, what is at 100%? Now 392 into 100 divided by 98, $400 was the full value. Peter was supposed to pay 400, however he is only paying 392. So the discount that he is getting, discount received, is 400 minus 392, $8 of discount received. Simple. So 8 is the value. This is how we can calculate the discount received if we are given with the post discount value and we have to find out the trade discount or the full value of the transaction. Now moving towards 25, it says a check for commission receivable 115 was paid into the bank account. What is this? Is it an income or expense? It's an income. Commission receivable, we are receiving that commission, so it will be debited in the cash book in the bank column. $115 on April 25, commission receivable 115. Then last, paid $285 to Rafael by cash in full settlement of a debt of $300. Again we are getting a discount, and the discount value is 300 less 285. We are getting a discount of $15. We were supposed to pay 300, however we are only paying 285, and this is through cash. So on April 29, Rafael, we are getting a discount of $15 and we are paying 285 cash. Okay, this was the last transaction. Now we have prepared the cash book. Now only the two final requirements are left, that is to balance and bring down the balances on 1st May 2022. So how do we do that? We already know that cash book is the discount columns in the cash book aren't balanced, they are just totaled, and bank and cash columns are balanced because it is a day book as well as a ledger for cash and bank only. However, discount received and discount allowed the accounts are maintained in the general ledger. So let's first total discount allowed and discount received. Over here we don't have any transaction related to discount allowed, so it's blank. But for discount received, we will total this column 42 plus 8 plus 15, that is 65. That's it. We don't write any balance CD or any balance BD for discounts columns. We will transfer this amount in its own account being maintained in the general ledger. Now cash account, cash account total would be 460 plus 135, that is 595 both the sides, and its balance CD would be 595 less 285 less 42, that would be 268 balance carried down on April 30th. Right, this will become my balance brought down on 1st May as well. Then bank column, the total would be 115 plus 410 plus 920. Please don't forget the balances brought forward. So that it's 1445. Write that both the sides. Minus 392 minus 798. That would be, the CD is 255. So bank is positive balance. Very nice. This is how we balance the accounts. Now lastly, on 1st of May, balances brought down. For cash it is 268 and for bank it is 255, and no balances for discount allowed or discount received. Right, so this is how we prepare cash book. Now let's move towards the next part, which says Peter has received a bank statement for April. He is using it to prepare a bank reconciliation statement and to update his cash book. Of course, now we are asked to place a tick to show how each item in the table would be used to prepare the bank reconciliation statement or to update the cash book. Now we know that certain transactions are entered in the updated cash book and certain are entered in the bank reconciliation statement. We are asked to place a tick to identify that which transaction will be entered in which account. For that, let's have a look at the format first, that how is updated cash book maintained and how is a bank reconciliation statement prepared. So in updated cash book, we have already seen that on the debit side there is only one transaction, the credit transfers, all the checks received directly in the bank account, but we are not notified, so we record the checks received such as dividend received or commission received or any other income on the debit side, and all other items are usually entered on the credit side, such as dishonored check, standing order, direct debit, bank charges or bank interest. All of that is entered on the credit side. And how do we prepare a bank reconciliation statement? We enter or we add or subtract unpresented checks and uncredited deposits. We adjust only these two items in the bank reconciliation statement because they are present in the cash book but not in the bank statement, usually due to timing differences. Now keeping this in mind, let's solve part B. It says the first is bank charges. Bank charges, where would that be recorded? In the bank reconciliation statement or in the updated cash book? In the updated cash book. But now on which side? Are they debited or credited? They are credited because it's an expense. We record that on the credit side. Then second is direct debit for rent. Direct debit is an instruction given to the bank to make this payment on the business's behalf without notifying the business every time, and we get to know about this when we receive the bank statement. So where would that be recorded? Of course in the updated cash book, but on which side? Again, being an expense on the credit side. Thirdly, check paid to a supplier but not yet cashed. We have written that check, we have recorded that check in the cash book, but that hasn't been cashed or that hasn't been processed by the bank. So where would that be recorded? Of course it will be recorded in the bank reconciliation statement because it is already recorded in the cash book. But should this be added to the bank statement balance or should it be subtracted from the bank statement balance? What is this? Unpresented or uncredited? It's an unpresented check. An unpresented check is deducted from the bank statement balance, right? If we are starting, now this is very important that the question has already told you clearly that the bank reconciliation statement is being started from the bank statement balance. We know that there are two methods to prepare a bank reconciliation statement. If we start with bank statement balance, we subtract unpresented and we add uncredited checks. However, if we were told that we are starting the bank reconciliation balance from updated cash book balance, then it's the opposite. We would be adding unpresented and we would be subtracting uncredited checks, right? This is the second way to prepare a bank reconciliation statement. That is, if we start with updated cash book balance, we add unpresented, we subtract uncredited so that we arrive at bank statement balance. But the question has already told us that we are starting with the balance as per bank statement. So uncredited would be added and unpresented would be subtracted. So this is important that you follow the question. Then check for commission received dishonored. A dishonored check already recorded in the bank statement, but we get to know about it when we receive the bank statement, so it will be recorded on the credit side. Then last, dividend received. What is this? Credit transfers. Dividend received, of course it will be present in the bank statement but not in the cash book, so therefore it will be recorded on the debit side of my updated cash book. Easy part. The last is prepare the account for Rahat as it would appear in the ledger of Peter. Balance the account and bring down the balances on 1st May. And again we are also given with the opening balance, that is 840. This is a very easy part, I believe. There were, I guess, 3 transactions related to Rahat in this question. The first is cash sales. No. Second is yes, paid 798 to Rahat by check in full settlement of a debt of 840. So over here we are paying Rahat how much? We are paying 798 and we are getting a discount of 42. This transaction is being credited in my cash book, so this will be recorded on the debit side in Rahat's account, right? Why? Because how would this be? What would be the double entry of this? Rahat would be debited by the full value, that is 840, and my discount received and my bank account would be credited as it is happening over here, 42 and 798. So both of these will be recorded in Rahat's account on the debit side separately. So April, what is the date? 3rd, bank 798. This is what we are paying and we are getting a discount of 42. Then the second transaction was we purchased goods, list price. Although this transaction wasn't entered in the cash book, however, since it is related to Rahat and we are buying goods on credit, so the double entry would be made in Rahat's account as well. Purchases debit, Rahat credit by 288. So on the credit side, on April 15, we will write purchases amounting to $288. Is that it? Any other transaction related to Rahat? Samir commission? No, that's it. Now we just have to balance the account. The credit side is heavier, of course, because it's a supplier account. 288 plus 840, the total would be 1128, both the sides 1128, and my balance carried down would be on April 30th on the debit side 1128 less 42 less 798, that is 288. Why? Because this was the only new transaction. We settled 840 by making a payment of 798 and getting a discount of 42. So this was balanced. This is the only remaining amount. And on 1st May, balance brought down would be 288. Right? And this question helped us revise a lot of concepts, I guess. How we prepare basic T accounts, first bank reconciliation statement format as well. How we calculate the amounts pre and post discount, which transactions are entered in the cash book, which aren't entered in the cash book, and how are they entered. So I guess it was clear, and that's it for this video. I'll see you in the next one. Take care.